Welcome to the Trading Lounge and the day ahead, the US 30 here. Everything seems to be pretty much on track of what we've been discussing in terms of an A wave, a B wave, and a C wave, which would make wave 2, and then we'll see further upside there. The further upside here would probably come from some sort of agreement coming from the US regarding the fiscal cliff. There seems to be some sort of compromise from the Speaker of the House and the administration in terms of taxes. So there is some positive talk there, and that's why the markets have moved up into wave B here, but of course there'll be some sort of disappointment with that, I'd imagine, and we're looking for a sort of a sharp fall down through to here. So still tricky business navigating through here, but once that's complete, then we can push to the upside from there. So yeah, look, the A wave is the 1, the 2, the 3, 4, and 5. Because we've got 5 waves there, that means that after a 3-wave counter trend, the 61.8% for the Dow Jones would be 13,250. So in there somewhere, any short trades could be a retest of the 13.2 there as a failed retest on lower volume for the move down. The C wave has always got 5 waves in it, so it would be something of this nature here. We should have a smaller chart of that, yeah. So look, this is what we've been tracking, as you know, the wave 1, the wave 2 in 3 waves, the 3rd wave, 4th wave, and the 5th wave here, and the A, the B, and the C, and this C, that may even be the top there at the top of the 30 there, because it's got the little 1, 2, 3, 4, and 5. I haven't pulled that apart, but anyway, once that 13.2 becomes a retested resistance, you can move it from there. So that would be probably around maybe close to the 50% retracement there. The S&P 500 would be much the same as well. This is a 20-minute chart. If I just squash this up a little bit, this is what we were looking at yesterday and the day before. We're just sorry for being so messy, but that's what blokes are sometimes. So the 1, the 2, the 3, 4, 5. So the ABC here to the 61.8%. So it's pretty much sort of on track. Will it turn? Well, should do, because we've got this 5-wave structure here. So we'll be looking for another 5-wave structure down through here to bring us into the 1400, which would take the Dow pretty close to the 1300 there. And that also sort of brings us through to our market as well, because if this does turn through here, then the likelihood of the Australian market, the ASX CFD, would probably find that resistance there at 4600, wouldn't it? So if you're going to go long, you'd really need, after a trend, there's a correction. So if that correction has support on the 46, by all means go long at that stage, because we need to trade what we see. But otherwise, we'd expect it to sort of fail through here. It does have an A and a B and a C through here. So we do slightly different from the US, but it does have that 3-wave counter trend there. So eventually that high would be taken out through there. That high being taken out would obviously be stopped in here somewhere for a larger correction. So I don't really know what to sort of say here. If the base metals are up really strong, which they weren't, then there would be something there. But they can develop, because in the copper market, we've also got this 3-wave move here as well, and the move up through here is starting to look like it's in 5 waves. It's a little bit early into the afternoon session in New York. It's still just 5 a.m. here, so still time to go. But we'll have a look at that now. So this is the copper market here, and excuse these trend lines, but what we're looking for here is, we were looking for, basically this is like a 3rd wave in through here, isn't it? This guy here. So we're looking for a wave 4 to pull back to the 4th wave of 1 lesser degree, which is in here. So that still could come back in through here. Let's just see if we've got a smaller view on this one here. This is what I was looking, it's a daily, just bear with me here. Okay, this is what I was looking for here. Actually, this is just a 20-minute chart here. So this is the A wave, possible B wave here, and here, and a C wave into here. But however, we need to see 5 waves up, and I can see here on the 20-minute chart we've got wave 1 and wave 2 here. Then we've got wave 3 here. Then we've got wave 4 pulling back to 38% whatever of this move here. So it is developing. So we can see some sort of consolidation here, then a push up to here, up to the 36738 mark here as wave 5. Then that little wave 5, there's 5 waves there. They will have an ABC correction, and then they'll push up again. So that could be the low that we're looking for. I just don't have the evidence in terms of an impulse wave structure here to give that to you. If it at the moment, it would have to be looked at as this 5 wave structure down through here and a 3 wave counter trend. So it's not just there yet. So we need to wait for that 5 waves, wait for the ABC to come back, and then move up. Let's just have a look at US BHP while we're here. And that's still up. That's all going good because the trigger was pretty much, support on the 72 there, as the same as in our local market as well. This is BHP here on the daily chart for Australia, and our trigger here was the Fibonacci number, the 34 here, to be long above that, and that's continuing. And the other thing I want to point out here is that there does appear to be a 5 little wave structure into this here. So this here would actually be wave 1 here. This is wave 2. This is the 3rd wave unfolding here, and in the 3rd wave, I know it's a bit tricky to see, but basically the 1, the 2, the 3, the 4, and the 5. So 3650 is always a good, I call it the 65 number, is always a good resistance point, followed by the 3720 if it moves up high there. But essentially would be looking for, in this little bracket here, would be looking for, just put that in there, that would be like that, that's what, like that. So we'll be looking for something like that. So we can see resources moving up further there. That's also why I think copper might come to the party and finish its wave 4 correction basically, and move up from this point there, but it can go a little bit lower through here. But anyway, we'll see how we go. That's a positive there. Another positive too is actually on gold here as well. It's a little bit sort of careful with what I sort of say here is that that there's a couple of ways to count this, but one way of looking at it is that if the 1700 becomes support, then we can look for a long trade on that. Now, we've got, because it made a new low through here, and B waves can do that, it's made a new low below this one here, but it also, like copper, it appears that we're getting 5 wave structure up through here. So if we do get 5 waves up through here and then a 3 wave counter trend, and then we find support on that, well, that will simply create a long trade. But as it stands at this stage as well, is that we have to follow our little A, B and C correction to here for wave 2. But I just want to put this one on the table there, because lining it up with copper would see higher prices come in. So, and also the fact that, well, having a new low and seeing 5 waves up through here would give us another 5 waves up. So this can also just be the A wave up here. All of this here could be wave 1 to here, then an A and a B and a C. So I know it's a little bit sort of confusing, but look, if we do get 5 waves up here and we get a correction through here and then we get support on here, well, then that creates a long trade up to the 1710 at that point. That's the bottom line for it all. If it gets 5 waves up here and it drops below the 1690 and finds resistance to 1690, well, then you can short from that point there. Silver would be doing the same too, pretty much bouncing off its current lows here at 32 as well. So we need to look at this being an A and a B and a C wave moving back up through here as well. The thing here is that it's moved up off the 32 here, so really need support on the 32.30 from that point, and that would get you to the 32.50 at that stage there. The oil market's rallying pretty much as expected. Bear with me here. This is a bit cleaner here, so that's not the one. Just clean this up while I'm here. So we're looking for our count so far was looking at this as, let's clean that up, this as wave A to here. I thought I'd done this before, but obviously not saved it. Wave B to here, and wave C into here. So that's there. And this should also line up with the B wave in the US indices. So if this rolls over from the 88 here, our target here, as you know, was 87, 72, and 88. In fact, the 61.8 retracement level comes in at 88.36, so a little bit sort of higher there, which is possible because this does appear to be a little third wave up through here. Looks like it's got a bit of strength there, so we should see a little bit more through there. There should be some relationship in the wave A to the wave C there, but anyway, looking at that and the B wave in the US indices to sort of move together and roll over from that point there. So alrighty, let's have a look at the US dollar index, because that's also due for a turning point as well. Okay, we're looking at the US dollar index through here, and we're looking at a five-wave structure to the downside in terms of the 1, the 2, the 3, the 4, and the 5 here. And in this fifth wave here, there will be 5 waves, so it's either down for 1 to here, or from this point here down for 1 to here, back for 2 to here, the 3rd, the 4th, and the 5th. So it could certainly be getting close to looking at a low through here, either at the 79.50 or the 79.30, a little bit lower down through here. But one way or another, we need to start preparing for a move up through here, which would be in line with the US indices having their B wave completing to the upside and starting to move to the downside. So here we can be looking at an A and a B and a C correction coming in here before we see further downside coming into play through here. So this would also be the same as the reverse in the euro. So as we're seeing 5 waves down through here, and we'll see an A, B, C back through here, and then further downside, we'll be seeing that in the euro and the mirror opposite here. So not quite finished just yet, but what we're looking for here is, let's just see if I can get a larger chart here. Okay, 30-minute chart here. It's a little bit rough, but we can still sort of map it out reasonably well. So we're looking for 5 waves up, which would be the wave 1 here, the wave 2 to here, then the wave 3 to here, the wave 4 to here, and we're looking for wave 5 at 132 here. In wave 4 to 5 here, we'll have 5 waves in there. So we're looking for the 1, the 2, the strong 3rd wave through here, and the 4th and the 5th wave taking us a little bit higher. The 61.8 retracement level would be back at the 130, I'd imagine, if we take it to the 132 here at least. So we're looking at 61 back at this level through here. Of course, we'll see a lot of support come in through this block through here. So just focusing on looking at this little sort of area in through here, you can see that this wave 4 here may not be the low here, by the way. It may be further over through here, because as the US indices unfold in their C wave to the downside, then we're going to get this coming down through here. So the US dollar index is going to find its low, push to the upside. This will push to the downside. So yeah, to just be careful of around here, because it can be sort of headline driven a little bit. A breaking of the midpoint here, the 131.50, would definitely see it coming back into this point down here, and maybe even creating a top. We just got to be careful that we haven't missed anything as such here. The 1, 2, 3, 4, 5, 1, 5. That seems so. We should see should still see a break above here, but I can see that it's really struggling here. So that's a real concern to me. So if support is found on the 131.72, then you can trade up to that point there. You know, it may sort of make a fool of me and even go a little bit, you know, a bit higher up through here. and the US dollar index break down to 30 rather than the support on 50. But it's going to be headline driven, and you just need to be a little bit careful there. But we should be making a high above here as such, as we had this over here before, so same thing as such here. So yeah, but once this is done here, then expect a turn back to the 130, and we should be able to see a move up from the 130 in line with the US markets moving up. So expecting quite a strong move up, and that would come in line with a solution to the US situation as well. So that's going to sort of happen late in the week or when trade comes back on. So it could be a move worth spending a little bit of time during Christmas with as well, actually, to be on the right side at the early stages there, and we'll keep a bit of a track on that as well. But we'll just see how we go towards the end of the week with all of this and see if we're on track. But it might be worth putting a bit of effort into to grab that move back up to the upside. May happen very early in the new year as well. So anyway, we'll get a bit closer to it first. Alrighty, well, that's it. As I mentioned with the robo trading, it's just best to keep it really light for this day or two until we've got this ABC situation completed and we've got a move to the upside. So yeah, just bear that in mind. That's what we'll be looking for. Alrighty, well, good morning and good luck.